In this video, I'm going to tell you 5 things you need to know about crypto before you begin investing. Cryptocurrency has become a hot topic in the past years, with more and more people being interested in the new asset class. But before you dive in head first and begin buying crypto, there are a couple things you're going to want to know beforehand. In this video, I'm going to go over the 5 things you should know before you begin investing in crypto. So with that, let's get started. At number 1, we have the fact that crypto is volatile. The prices of cryptocurrencies can fluctuate greatly in very short periods of time. For example, in November 2021, the price of Bitcoin was well over $60,000. But at the same time next year, in November 2022, the price was well below $30,000. This is a huge fluctuation. This means that not only is there a chance that you could make a great profit with your investments, but there's also a chance that you will receive a significant loss to your portfolio. It's important to be prepared for this volatility and only invest what you're willing to lose. One of the main reasons for the volatility in the crypto market is the lack of regulation in this space. Without clear guidelines and oversight, the market is very susceptible to manipulation and speculation. In addition, the market is highly influenced by news and events, such as new government regulations, hacks, and adoption by mainstream companies. To minimize the risk of volatility, it's important to diversify your crypto portfolio and invest in a large number of different cryptocurrencies. This can help you spread your risk and reduce the impact of any one specific cryptocurrency's price movements. At number 2, we have the fact that crypto is not fully anonymous. The second thing you need to know about crypto is that although it is believed to be anonymous, that is not completely the case. While crypto transactions are linked to your public key rather than your name, they can still be traced back to a certain individual. For example, if you're using a crypto exchange to buy and sell crypto, you're most likely going to have to provide some real information about yourself and verify this information with an ID or a passport or some type of legal government documentation. In addition, there have been tools that have been developed that can trace specific addresses back to people. This means that if you were, for whatever reason, planning to use crypto for illegal activities, there's a very high chance you'll still be able to get caught. It's important to be aware of this and be cautious while conducting transactions. While some cryptocurrencies such as Monero and Zcash offer enhanced privacy settings and security settings, they're not widely adopted or allowed by merchants and other firms because this isn't necessarily something the general public wants at the moment. To protect your privacy while using cryptocurrency, it's important to use your own personal wallet and make sure you have and only you have access to your public key. Regardless of which cryptocurrency you're using, you should always do safe online practices to protect your identity. This can include using very strong passwords, doing two-factor authentication, and always storing your security keys somewhere where only you know and can have access to them and not where somebody else can access them as well. At number 3, we have crypto wallets are necessary. Yes, the third thing you need to know about crypto is that crypto wallets are essential towards storing your crypto coins. Crypto wallets are digital wallets that allow you to store and manage your cryptocurrencies. There are different types of cryptocurrencies on different blockchains, which may require different digital wallets that are associated with that specific blockchain. So you're going to have to do some research beforehand if you do want to move your cryptocurrency off of an exchange onto your wallet and seeing which blockchain you're using and which wallet is supported by that blockchain. I've made a video in the past going over how important storing your crypto off exchanges is, but the main idea is that it's important to keep your wallet secure and to never share your password with anybody. If someone somehow gains access to your security codes, they can steal all your cryptocurrencies. You should also back up your wallet in case your device is lost or stolen so you still have access to the data. Very important, wallets are necessary. At number 4, we have the fact that transactions can be slow, irreversible, and expensive. While some cryptocurrencies offer fast and low-cost transactions, others are very expensive and can be slow, especially during periods of high demand. For example, at some point, Ethereum's gas fees were over $100 just to confirm that a transaction will go through. Not only that, but there was also a chance that your transaction may fail, which meant you were out $100 and your transaction didn't even go through. In addition to that, once a transaction is confirmed on the blockchain, it can never be reversed. This means that if you send a transaction to the wrong address or fall victim to a scam, there's almost no chance that you're going to get your money back. It's important to always double or even triple check the address of the party you're going to be sending funds to and only try to exchange with trusted parties. And if you want to avoid high transaction fees, you can look toward cryptocurrencies that offer low transaction fees or you can try to transact during off-peak hours when these fees are generally going to be much lower. On the other hand, if you want to prioritize and accelerate your transaction, you can pay more, making sure that your transaction goes through as promptly as possible. Last but not least, at number 5 is the fact that crypto is not backed by any government or central authority. Unlike traditional fiat currencies such as the US dollar or the euro, for example, which are backed by governments and regulated by central banks, cryptocurrencies operate independently and therefore aren't backed by any governments or institutions. While this may offer greater freedom and privacy, it also means that cryptocurrencies aren't subject to the same protection as traditional currencies are. This can lead to greater volatility and greater risks of scams and frauds. It's important to do your own research and only invest in cryptocurrencies that have a strong track record and a strong community. You should also be aware of the laws and regulations towards cryptocurrency in your country, as these tend to vary greatly depending on which country you're located in. If for whatever reason you aren't sure, I would definitely check that out first because it's important to know before you begin investing into cryptocurrency. So there you have it, 5 things that you need to know before you begin investing in crypto. While cryptocurrency can offer exciting opportunities for investment and innovation, it still comes with its number of challenges and risks as well. It's important to be aware of these before you begin, and by following these tips and informing yourself of anything that changes in the space, you'll be one step ahead to protecting your investment and having a brighter future while investing in crypto. Thank you guys for watching. Do hit that like button and subscribe if you enjoyed the video. See you next time.